Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome. And welcome back, KS family. Please note I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. In the previous session, we saw the major indices rally. As a community, we're really focused on not getting caught up with recent indicative price, or RIP, or SBA, story-based analysis. A very interesting chart in the news. Top equity bears eye another big down year. This gives it away. They're bears. They want the prices to go down. They're eyeing another big down year, but they're always eyeing a big down year, no matter what they're doing, because they're bears. The story is already set, and that's a problem because it doesn't mean that stories come true. When we look at the federal funds rate, this is this sort of pinky line in the background. We can see it's ramping up, and it's ramped up before as well. What people are saying, well, it's going to flatten out and then just come down. So they're predicting that this point is this point. But just notice this, something really interesting. Even though the bears say that the major indices, the S&P 500, the SPX and SPY, are going to come down, there's still a bit of a lag effect. So these things could take time. Just be aware of not getting sucked into stories. We saw a broad-based rally in the US markets in the past trading session, all sectors up 0.75%, with real estate doing the best. Global markets mainly green across the board, except in Norway, and a little bit in India, Japan, and Indonesia, but overall pretty green. At the next FOMC meeting, there's a 70.2% probability of a 25 basis point increase in the federal funds rate, up from 67.8% one day ago. And we can see mainly the US markets were green, but healthcare took a bit of a hit. All financial markets are intercorrelated and interconnected. Why is this the case? Because simply investors and traders want a return. And investors and traders are likely to change their investment and trading preferences and investment and trading markets as well. When we look at crypto, over the past 24 hours, Bitcoin is up 1.14%, so let's run the numbers. And Ethereum is up 3.5% to 1256. The FOMC meeting minutes came out in just recently. And what do all these people in attendance say? Well, they're basically saying, hey, just hang on a second. Inflation is not under control. We just need to keep on raising the rates. They're not doing a premature pivot. They expect to maintain elevated policy rates through 2023. One terrific thing to see, banks are expected to move deposit rates modestly higher relative to the target range in the coming months. Wow, what a completely breakthrough concept. The banks are actually passing on increased interest rates. Wow, that's good on your savings, but of course more so on your loan rates. The Fed has said so many times that it can't let inflation expectations get baked into purchasing and consumption decision making. Tim says it well, chief U.S. economist at research firm SGH Macro Advisors. The Fed is saying it's committed to a particular outcome, which is higher unemployment and a weaker labor market. This means that the Fed is trying to destroy demand. It's been really clear about its objectives. It won't give up until it's basically crushed the economic system. This is bad news for investors. Investors want to see their funds go up in value, but what we're going to see is a lot of choppiness inside markets. That is great for traders, but traders and investors do the same action, but they have a completely different mindset. When we look at the S&P 500 and analyze the 9 sell-offs and recoveries since 1966, we can see some really positive outcomes in the SPX. What we see first and foremost is this level of support at 37.48 has actually been quite well respected. The S&P 500 is currently 38.52. If we get down to this level, 35.77, then we'll have some serious worrying to do, because we would have actually witnessed the same kind of low as that we saw here. So we don't want to do that. We don't want to actually break the 35.77 mark. Getting down to 37.48 is actually quite healthy. All price moves in a wave. Looking at the SPY, which is the S&P 500 ETF Trust, we can see that we had the JOLTS job openings, and JOLTS is Job Openings and Labor Turnover Survey. That was released, as was the ISM Manufacturing PMI. You can see the variety of different SL levels. Stanfield levels are formed from the CTKS Method Standards Certification process. And one thing that I wanted to point out to you here, previous job openings were 10.51 million, and the actual JOLTS job openings fell to 10.46 million. It was forecasted at 10.04 million. Typically, when actual is less than forecast, that's negative for the US dollar. And typically, when actual is greater than forecast, that's positive for the US dollar. Inside the masterclass, we talk about all the intercorrelations, and we'll also look at that in a little bit of time. But the one thing that I want to draw your attention to, when we look at the ratio of job openings to unemployed people per country, we're looking through the US, this orange line, the UK, that silver line, and Germany, that sort of bluish violetish line. The concept is we can see that in terms of the scale, the US has a very tight labour market compared to the UK and compared to Germany. There's about 1.7 job openings for every unemployed individual in the US. In the UK, there's about 1 job for every unemployed person. And you can see the number in Germany is much, much lower. You'll hear the Fed talk many times about a tight labour market. That's actually what they're referring to. And you can see from the conference board measure of US CEO confidence, the actual grey line here is the confidence that they're expecting. You can see that their confidence is just plummeting at the moment. And when we look at the US unemployment rate, because of the closure of economic systems and their reopening and the massive amount of stimulus that went in, which caused the inflation problem. Well, it wasn't just that. There were supply chain shocks and a lot of other things. But the concept is we've seen the unemployment rate skyrocket back. Now, what do we notice when confidence comes down? What is the story? Don't forget, it's just a story. Actually, this is a really good one for you to analyze in the comments section. I'll give you some pointers, some things to look at. What we've seen is a very steep drop down in US confidence. Confidence, of course, is a percentage measure. What are we seeing with the unemployment rate? That's also a percent, but it's much lower than that one. This is how you identify what the scales are without them having to explicitly name them. Then seek to actually try to equate what a downside movement, especially a sharp one like this, where have you seen it before? Well, you really haven't seen this momentum previously. A lot of people will say that it's this momentum, but in fact, is it this momentum? Dropping from a little over 2 to around 14, so let's say 2 to 14. This would be equivalent to dropping from here all the way down here. How much time did it take? Not much time at all. So from here down to about there in that period of time. So we don't have a comparable data point to actually compare it to. Even this one, this is well below 2. So if it was up here and it dropped all the way down to here, we might have comparable data. We actually don't. This is why I'm saying it's a story. You'll see many people just say, oh, because it fell like this, it's going to ramp up and then it's going to fall over. So it's going to do this and it's going to do this. That's just a story, and you must understand stories are just stories, especially in financial markets. We say no to stories with the CTKS Method Standards Certification process. What we basically do is that we mark up all of price history with a very specific methodology, and that's available at the ctksmethod.org. What you actually see is these dotted lines on the SPY. They tell us where the market will find resistance. The smart money will come in and sell these levels, or it will find support here, these smart money buy levels. You literally have x-ray vision on the market. You will know what smart money is doing. Is it buying? Well, yes, in fact it did buy. Is it selling? Yes, in fact it did sell. What are the next levels? That is always the key that you want to keep in your mind. That's what smart money is always looking at. It's always looking at what is next. We can see that the SPY is currently trading at $383.73, $383.73. We can see a smart money sell level above that, actually a few, at 385.15, a smart money buy level at 382.80. What you actually do as a professional, if you don't have stories, you must have structure. Structure is Objective Dynamic Market Structure, or ODMS. You judge the market based on the market's movements, not market commentary. You become independent from the news. You of course must factor it in, but you actually look at how different charts intercorrelate together. And of course, you also need to understand economic data, the ISM manufacturing PMI, and that's one of the best indicators of the health of the US economy. The previous reading was 49.0, the forecast was 48.5, but the actual was 48.4. When numbers come in below 50, it indicates manufacturing contraction. When it's above 50, it indicates manufacturing expansion. It's 48.4, which is indicating contraction, which actually indicates that the central banks are doing their thing and hammering the economic system into the ground. I literally have no concept, no understanding at all why central banks just don't have more policy measures to help the economic system out. They only have literally two, monetary policy and fiscal policy. Hey guys, create some more. And of course, gals, it's really ridiculous what we see inside the government. How do central banks actually fight inflation? They reduce their balance sheet, their purchases. They control the money supply. But you can see the M2 money stock is actually starting to increase. When you've got an increased velocity of money circulating around the economic system, that actually creates inflation. But there are two types, M1 and M2. M2 includes savings as well. So we can see less money is circulating inside the economic system, and the disparity between these two, because M2 includes M1, we can see that savings are actually starting to ramp up. And those very nice banks, they're going to start increasing the savings rate, the amount that you actually get back from the bank. Oh, how incredibly nice of them. You wouldn't believe that I actually have a banking and finance degree, but I do. The banks, they're very naughty. They generally take their time passing on increases in savings rates, but they're very quick to pass on increases immediately in your loan rates. Very nice of them. We can see from this chart the CPI still is coming up. That's a consumer price index, a measure of inflation embedded within the economic system. And when we look at the 5-year forward inflation expectation rate, that's been coming down. The 10-year break-even inflation rate, that's been coming down. The 5-year break-even inflation rate, that's been coming down. And how has it come down? Because look at Bitcoin and look at the NASDAQ. Look at all the major indices. They've all been hit. But how did they get hit? How does the central banks, how do they do this? Masterclass students, you get this live chart in LV24. The concept is they do it by increasing government bond yields. This particular thing, all of these lines are the 2-year, the 20-year, the 5-year, the 30-year, and the 10-year yields. When they do that, they're actually trying to create a shift in the dynamics of financial systems. The bond market never escaped the stock market, and the stock market never escaped the bond market. So when you hear about people saying, well, crypto is going to escape the stock market and the bond market, well, they don't even talk about the bond market. It's just not going to happen. It never has, and it never will. Why is that? Because it's just an investment vehicle for the majority of people. But we can see the federal funds rate prediction at April 2023 is currently 4.855%. We've got a 5.25% upper boundary on this, and we put it all the way back around the middle of October 2022. If the economic system goes into contraction, just think about what happened with C19 when the markets melted. And why did they melt? Because the whole world closed down. And when it reopened, all the supply chains were broken because all the countries didn't reopen at the same time. Unfortunately, some people think that the coronavirus, C19, is a fantasy. It's not. It's actually a medically documented virus. It actually exists. This was the virus's genome sequencing just back in February 2020. And the major problem with coronavirus, or SARS-CoV-2, is it keeps on mutating. It keeps on changing where it's actually infecting. And it's a very, very dangerous disease. I started following C19 in late December 2019, and I had the privilege of knowing and working with some of the top experts in C19 globally, and it's just so incredible how many people don't believe it's real. It's real, and 6.7 million people lost their lives to it. I just literally do not understand people who do not think it's real, but okay, each to their own. But when we see the number of new cases just in the previous day, it's 353,987. This thing is not going away. And with China reopening and China saying, oh no Chinese citizen can be scanned for C19 when they visit other countries, that's just plain ridiculous as well. The US very sensibly requires a negative COVID test from Chinese travelers entering the US, but China is not happy about that. China vows to hit back at nations imposing COVID travel curbs. But however, if you try to get into China, good luck. Let's have a look how it works when we go the reverse way. To enter China, you need a nucleic acid test prior to departure. You should confirm pre-departure requirements with your nearest Chinese embassy or consulate and your travel agency. You'll be subject to centralized quarantine at the first point of entry to China. Oh, we don't do that in Australia, and we don't do that in the US, and we don't do that in Japan. But yet, we do it in China. As previously advised, authorities have detained foreigners on the grounds of endangering national security. Australians may be at risk of arbitrary detention. When it comes to China vowing to hit back at nations imposing COVID travel curbs, well, I guess other countries are just doing what China does. When I read any story, I make sure I get both sides and both perspectives. You can see that this is very unequally weighted. And the situation in China is really heartbreaking. Funeral home workers say that the whole system is paralyzed. When I was doing statistical analysis on C19 breakout, one thing that we saw in the statistics, China always underreported its numbers. And it just has 3 new deaths in the past 24 hours. According to the latest statistics, which they've basically stopped publishing. And the World Health Organization is prodding China to release reliable C19 data. The lack of China's reporting transparency is very, very well known in medical and statistical circles. Professional investors and traders understand what's actually happening inside the economic system. They're not guilty of just swallowing whatever the mainstream media says. They do their own research because they're accountable for their own money. As professionals, we have to bear in mind what could happen. We're not looking at things politically. We're trying to understand the economic ramifications. Therefore, I want to take you back so that you can see what happened when the world shut down last time. Between the 13th of February 2020 and Friday the 13th of March 2020, we saw the markets absolutely drop off a cliff. The 5-year and the 10-year break-even inflation rates just utterly collapsed. Bitcoin and the Nasdaq went down and went down hard. Bitcoin recovered first. You can see that the CPI took an absolute nosedive. One interesting thing to note, M1 and M2, the money supplies, you can see M1 just went on a rampage and M2 as well. This was all about the increased funding of the economic system and the stimulus that basically brought economies back to life, but they also created the problem of inflation. As professionals, these are things that we must be aware of. I would suggest that the single best way of actually knowing where the market is going is to see where the smart money sell levels and smart money buy levels are being honored. It's also to just drop any story that could be out there. Just look at the facts. And you can see that Bitcoin is a really good asset class to actually track because Bitcoin tends to sell off first and tends to recover first as well. It can give you incredible guidance as to where the stock market is going because it over accentuates both the stock market's down moves and up moves. When we look at the market, we look at the market through the CTKS method. These SL lines give us a degree of probabilistic certainty or probability about where smart money is coming in to sell the market down and smart money will come in to buy up the market. When we break through a smart money sell level, we typically have to break through it on volume, and that's exactly what we saw in the last session. And then we know that this smart money sell level exists above it, so it's going to have problems getting through it. This kind of gives us X-ray vision on what the markets are doing. And I've been talking about this, of course, since the start of the year and put these particular levels up. They are very, very powerful levels. If you would like to know what smart money knows, simply do CTKS Method Standards Certification. It's available online at ctksmethod.org. An important thing to understand is how different markets intercorrelate and interconnect. This blue line here is the S&P 500 futures. You can see Bitcoin was actually pointing towards an upward movement, upward momentum inside the stock market. We know that Bitcoin cannot escape the stock market's gravity, but there's a little bit of a side rule to this. Bitcoin often predicts the direction of the stock market in advance. For example, Bitcoin bottoms out first, typically. You can see that the S&P 500 futures and Bitcoin are starting to align. So when we look at Bitcoin, what are the key levels that we need to keep our eye on? Bitcoin is currently 16,830. We're in the amber zone at the moment between 16,812 and 16,922. Price could wobble around here as it tries to make a play either up or down. It's still positive if Bitcoin goes below the smart money buy level of 16,812. Because the one thing that we know, price is always moving in a wave, and there are a lot of retail shakeouts that occur. You've probably seen this 1,000 times. You're in something, it starts to go down. You sell, it reverses, it goes up. That's called a retail shakeout. That retail shakeout zone would be between 16,705 and 16,812. Things are starting to get a little bit dicey if Bitcoin's price trades between 16,625 and 16,706. That could foretell a sell-off is coming. And if Bitcoin goes below 16,625, caution would be advised. If we conclusively take out the smart money sell level at 16,889, and that should be proven when Bitcoin trades consistently above 16,922, it's pretty much open skies ahead. Just beware, the market could go either direction. Just keep your eyes on these levels. And as Bitcoin goes, so too does the entire crypto market. Turning towards the greatest gainers in the past 24 hours, Ethereum Classic up 18%, LDO up 16%, NEAR, XEC, Bitcoin Gold, Axie Infinity and Optimism all up. The greatest losers in the top 100, not down by much, OKB, Solana, Flow, Mina, Aptos, HT and Atom. Now we know the levels that we have to observe on Bitcoin. What we want to do is understand how your beloved alts are aligning with Bitcoin's gravity. And you can see Ethereum is basically smack bang on Bitcoin's gravity. But have a look at the difference in percentages. Bitcoin is up 0.55% and Ethereum nearly 3%. This is the beautiful thing with the alts. They really rock and roll, but when Bitcoin goes the other way, you can see much more extended losses. So you do have to be careful. And look at BNB. BNB is up 4.34% over the same period of time, where Bitcoin is a little over 0.5% up. XRP is down currently 2.43%. It's vitally important that XRP win its case, or Ripple Labs wins against the SEC. If it doesn't, it creates a very dangerous precedent that will apply to other cryptos. If XRP is deemed a security, XRP will suffer in terms of value, but it won't just be XRP, it will be all the projects. Investors do not like uncertainty. Traders, they do. They like uncertainty, a lot of it. But the concept is investors in it for the long run need to know that they're protected as much as possible. The whole crypto space needs to get behind XRP and just wish it well on the SEC case. It does look quite good, but you never know with legal cases. We can see that Doge put in a bit of a spike up to 4% up. It's currently 1.51% up versus Bitcoin about 0.6% up. The one thing to take note of as Bitcoin goes through those various bands, and these are the bands that I'm talking about. If it goes down and finds support, creates a higher low, and then pushes through these two resistance levels, that's really good stuff. And note this particular pattern. Here we're using dollars. What about when we look at the top 8? We're not using dollars at all. We're using patterns. So long as Bitcoin comes down and forms a higher low, that's one of the worst case scenarios. What we would like to see is Bitcoin to just rally up above and keep on going. When it comes to trading and investing, there is a lot of uncertainty. Uncertainty is where you make your money. If it's certain, it's a bank deposit getting bank interest or a bond coupon return. That's not what happens in crypto. Crypto is incredibly volatile. You actually don't need certainty. You need a strategy to profit from uncertainty. The market is always transferring money from the desynchronized to the synchronized. One of the most important things that you can ever do is to actually increase your synchronization factor. And we do that through the CTKS code. Looking to the next 8 top crypto projects, we can see 8 has done really well, up a little over 8%, with Bitcoin only up 0.5%. That's pretty impressive. Good on you, Charles. Matic doing really well, up 2.35%. Litecoin just elevating into the stratosphere, up nearly 13%. Litecoin has been outstanding. And DOT up about 7%. Tron just up 0.44%, just a little bit less than Bitcoin. And look at Solana, up 40%. This is crypto. In the crypto space, the weak become strong and the strong become weak, and that's a really good illustration of one that's become very strong. And what about SHIB? It's up 4.13%. There was an absolutely fantastic discussion in the comments section about one orange, two people, the dilemma. Each person wants the orange. And that was all about how do you solve a problem using positive excellence. One of the keys to understand, there are 4 zones that people can operate inside. Zone 1, the panic zone, which is all about entitlement. In this particular case, the person would say, I'm entitled to that orange. Even if it's in your fridge and you bought it, I'm entitled. I want it. And if you don't give it to me, you're a bad person. And I'm a victim. In Zone 2, the blame zone, the conflict and jealousy zone. This is a slightly different thing. There are a few dimensions to this, but typically, let's take the worst one. In the conflict zone, Zone 2, the person says, that's my orange and I'm going to fight you for it. And I don't care if you bought it. I don't care if it's in your fridge. I'm taking it. Zone 1 and Zone 2 are both scarcity zones. Scarcity means there's a limited number. It's literally a win-lose scenario. Either one gets the orange or the other one goes hungry. Enter Zone 3. This is a slightly different zone. In Zone 3, people have worked pretty hard to get what they have. So, in Zone 3, it's not about entitlement, playing the victim. It's not about beating people up, playing the bully. It's about sharing and caring, negotiating, trying to find an equitable way forward. But Zone 4 is the positive excellence zone where we've mastered fear. It's also about win-win and wealthy thinking. It's not about win-lose. In Zone 4, people actually respond in a completely different way. They say, let's go find another orange. In Zone 4, people see the world as just full of abundance. There's not just one orange. There's limitless amounts. In Zone 4, we figure out how to get access to that unlimited quantity. The reason that we talked about the 2 people, 1 orange scenario was that part of the CTKS creed, I never let a problem beat me, I solve it with positive excellence. The world has hammered in this idea, this concept, this wrong notion of scarcity. That has actually driven people into Zone 1 and Zone 2. The majority of the population exists in the first 2 zones, and those zones just create terror and a very harsh life for the people who live in them. It's our mission and vision as a global community, a global family, to help people out of Zone 1 and Zone 2 into Zone 3 and Zone 4. Zone 1 and Zone 2 cause so much suffering, and it's needless suffering. With an understanding of these 4 zones and an understanding of positive excellence, people's lives can change for the better, and that's what our community represents. The fastest way out of Zone 1 and Zone 2 is through positive excellence, and these to-be lists, these little green words, will actually transform a person's life into a meaningful and happy life, and also a successful life. So many people just focus on money, and they think that money will solve their problems. Money creates as many problems as it solves. A lot of people want to be really famous, but those same famous people have to hire bodyguards and security everywhere they go. I invented this positive excellence framework because I wanted to help people to get to the other side of enjoying life. Money and success is always the byproduct of doing the right things. I have another challenge for you today, another one that you can solve with positive excellence. As a community, a global family, we understand that all results come from the mind, and a better mind creates better outcomes. That's why we do daily positive affirmations for abundance, financial success, and happiness. And that's what the CTKS Creed is all about. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy, I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. I never let a problem beat me because I solve it with positive excellence. The problem to solve today, if you had $10 million and you wanted to invest it or trade it, who would you give it to? to do that on your behalf, please let me know in the comments. I'd like to personally thank each and every person who commented on yesterday's problem. There were so many phenomenal statements and some really hilarious comments. Thank you, Michael. We just have an incredible global family, and I appreciate you all so very much. If you have family or friends who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.